Good morning, good morning. How's it going, guys? Glad you can make it to today's episode. We got a big day today, lots of data coming out. Starting in 13 minutes, we got the ADP employment change numbers coming out. And then at 9:45, we got some more global manufacturing PMI. At 10 o'clock, we got even more. And then we've got at 2 p.m. the Fed interest rate decision. So the question is, what's going to take place? What's the numbers going to be? And how are the markets going to react when the numbers come out? Well, that's what we're going to discuss today. We're going to take a look at the storyline of price. Because we don't have crystal balls, we can't determine, we can't know exactly what the numbers are going to be. But what we can do is we can follow the storyline of price, and we can see just whereabouts in that story we are. And then that will give us a good idea of what is likely going to come. So again, thanks for joining me today. Nice to have you guys. So this is the data, this is the schedule that we have for today. This is what's going to be coming out. And so let's start, shall we, by taking a look at gold and see what's been taking place with gold price. Last we spoke, we were talking about how price is likely going to be staying near the highs after a significant rally up, which we could see took place on the monthly chart. Actually, look at that monthly chart. Look at that major wick up here, eh? That's pretty crazy. It's pretty crazy. I don't really like that. I don't really like that it did that. But okay, that's what it produced. And so if you look at the daily chart, you can see what has taken place recently. Okay, from the highs, price dropped into where? An institutional demand zone. Was it able to come up and surpass the previous highs? No, it wasn't. In fact, all it did was slouch over and turn back down into the institutional demand area. So we still have demand in play at this point. So that means pressure will be to the upside short term. Okay. So far, the short-term pressure was short-lived. It didn't give us much momentum. So we're watching to see if it's going to be produced here. So how would we know that? Well, one thing you can do is you can switch it down to a 1-hour chart and take a look at the structure of price coming down into that area of demand. Okay. And so you can see we had price action was up here, a move down, and now price action is here, and then a move down. So one thing we would be looking for is a break above this area here. Would essentially be considered bullish. So we would need price to come at least up to this area here. And then we'd watch the structure for building momentum to the upside. If that doesn't happen, if price starts coming up and it's unable to surpass these areas here, we're likely over time going to see a drop. Okay? So that's what I'm looking at with respect to gold. We have short-term momentum to the upside. One thing I will pass on to you is if we take a look at silver. Silver has already made its decline. All right? That same institutional buying area that we have on gold has already been demolished here. Okay? And when I say same, what do I mean? Well, at the same time that price was moving upwards, the banks decided to create demand on the chart, on the daily chart, both on silver and on gold. But this drop on silver was so aggressive, it took out their demand area. So there's officially no demand holding price up on silver, while there still remains that demand zone on gold. Okay? So that's the dynamic playing out here. Now, when we go over to the euro, this is the big chart that everybody's watching right now. Okay. And let's just examine this for a bit. So we had retail traders coming in aggressively with their long positions down here. Do you remember that? And we had forecasted that price was going to move up. And so that's exactly what took place. We had price moving up. Well, since then, when price got near the highs, we had retail traders increasing their short positions. They decreased their longs from a massive amount, and we knew just how aggressive they were, because when we were looking at their positions here on my FX book, if you come over and you click on Euro US dollar, you can see that if we go back here, let's click on 4 hour. Okay, there we go. This is where we were at, okay, with long positions. They were super aggressive. And so they offloaded those positions, and that's what caused this rally up that we see here. Okay. This is why we saw this rally up, because they needed to close out their positions. They were pretty much maxed out. So once the banks started putting pressure to the upside on price, that got them to bail out on their long positions, and they started to acquire shorts, which we see took place up here. But as you can see, the numbers weren't very aggressive. 68, 66%, nothing really aggressive there. But nonetheless, some supply was brought into play here, which helped to facilitate a move lower, okay? And at the same time as this drop took place, what did retail traders do once again? They offloaded their short positions and they started to get back into longs. Now, I think at the very low here, I think we got as high as 80%. At least this is what it has been reported to me. I believe it was about 80%. Last I checked, it's 71%. But then again, if you look here on the sentiment, let's go 5 minutes, and we look at just recently. Okay, you can see that we've declined from 24,000 or 23,874 lots down to 16. Shorts were at 5. Now they're at 6. So 80%, yeah, it's possible that down at the lows here, we were at 80%. So later today, we have data coming out. Well, what do we have going on with price? Well, we have retail traders acquiring a long position as price was dropping. And now we see that they're slowly offloading those long positions, okay? And what we have here is an institutional demand area. So right now, if you went to the bankers and said, look, data is going to be coming out. Big data numbers are coming out today. Can you let us know, are you buying or are you selling? That should give you all you need to know about what to expect from the markets today. And the answer is buying, okay? Now, I think I think this drop yesterday may have been to get people excited about the prospect of the euro dropping today. Maybe I'm just thinking, okay? Because in all my years studying price action, there's been so many instances where I've seen leading up into data, the markets are pushed in a certain direction, just to get retail traders thinking, oh, maybe the big players, they know exactly what's going to happen with the data numbers, and they're already getting in early, and they're pushing the market this way, so let's jump in. I've seen that so often. And so price was declining. At the highs, retail traders had a short position, right? Then they started to offload that short position. And then the banks dropped the price. Okay? And this is as retail traders were acquiring a long position. What happened near the lows of price dropping? Retail traders said, you know what? Let's go back with our initial thought that the euro is going to drop, and let's short. And that's what they did. Okay? Now, and that's what they're doing right now. They're shorting the euro here at the lows. So again, if you were to go to the big institutions and say, what are you doing right now with the euro? Their answer would be, if they were being truthful, their answer would be, we're buying. Okay? So there's buying pressure coming from this 106 area. And we're essentially stuck in a range because we have demand down here and we have supply up here. Okay? We're stuck in this range on the 4-hour chart. But the main driving force right now, temporary force, is buying. Okay? So I think we have some data that's just about to come out now. Let's switch over to that in 1 minute. Yeah. Let's take a look at that. In 1 minute, that data is going to come out. And if we click onto it, let's just take a look. According to ADP National Employment Report, non-farm private employment in the United States is being monitored. It is developed by Automatic Data Processing, Inc., and is based on actual payroll data from around 24 million employees. A higher than expected figure should be seen as positive, bullish. Okay? A higher than expected is bullish, while a lower than expected figure should be seen as negative, bearish. So let's see what it's supposed to be. Previous 184, consensus 175. So if it's above 175, it's bullish. Below is bearish. And we got the euro reacting to demand right now. So let's just sit and watch and see. We got 19 seconds to go, and let's see what happens. Eight seconds. 0. Positive. So let's watch the euro. Okay. Came out as positive for the dollar. So that's negative, right? Interesting how right now retail traders, what were they in the process of doing? Offloading their longs for shorts, right? So what do you think the average trader is thinking right now when they see this positive number? It's positive for the dollar, negative for the euro. Maybe it's building their conviction to short the euro. Possible. So what I'd like to do at this point is I'd like to mark that area. It was positive. So I go to positive. And ADP employment change. I don't need the the rest of that. Positive. Yeah. Okay. So later on, when I look at the chart, I'd like to see what data came out. Was it positive or negative for the US dollar? And how did it affect the price? So right now we're seeing not much is going on with price. Let's take a look at the dollar. Yeah, same thing with the dollar. Not much is going on here. So it looks like everybody's waiting for the bigger news. Nobody wants to really react to this news right now. Okay. All right. So just keep in mind what we're seeing here and what's taking place. Don't worry about the headlines. Don't worry about, because there's so much out there. I mean, I was just looking at Yahoo Finance and was looking at the articles here. Look what we have here. US dollar continues to power higher. Okay, that was the case. All right, that was the case. It's no longer the case. All right, we had a massive rally just recently. And I believe when we look at the latest set of data, we'll see the banks starting to take profits on long positions, okay? That's my prediction. That's my prediction. I'm putting that out there right now. That when we look at future COT reports, we're going to see the banks taking profits on long positions. So articles like this are not very helpful. US dollar forecast, okay? US dollar Japanese yen forecast continues to power higher because retail traders see that and they think, okay, it's going to continue higher. Because this article makes a very good point for why you should continue to buy the US dollar Japanese yen. Okay. So I'm just saying, be very careful, because when you're reading these articles, it's not giving you the real story. And the only person that's going to give you the real story is you, if you know what to look for. Okay. That's why you guys come and watch these videos and these sessions, is because you've seen our ability to lay out a different narrative here, one that's more in line with reality than what you're seeing on the news. So I would just caution you that as this data is about to be released, we have institutional buying that's taking place. So the pressure will be on price to the upside. All right. But at the end of the day, we do have a range here on the 4-hour chart, and price will likely stay in this range until one of these areas are taken out. So look at these two areas, the supply and demand, as two major containing walls that are holding this in here. And for price to really move in either direction, one of these will have to break through. All right. Any questions on that? Good morning from Nigeria. How's it going, Charlie? Hello, my favorite lecturer. Thank you. Entered a name. Grand Rising from Florida. Okay, thank you, my friend. All right. Okay, that's it. So, no questions, so I'll let you guys go. And, yeah. All right. Hopefully that was helpful to you. And, yeah, we'll see you tomorrow morning. Keep your eye on the charts. Keep your eye on the news. I personally wouldn't be trading. I wouldn't be going long euro just because demand is in play. All right. When I say demand is in play, I'm not suggesting that you go long. Let's be very clear on that. You know, I don't want to get messages saying you said they were buying, so I was buying. No. This is temporary. It's in a range. There's data coming out. I'm just telling you what's happening now. I'm not saying you should buy. I'm just saying what's happening now so that you understand when price does what it does, you understand why it's doing what it's doing. Okay? All right. Now that we got that out of the way, enjoy your day. Take care. Sayonara.